Ira Epstein of Linn Associates with your financial market wrap-up for this Monday. And we're at the 21st of October, 2019. But I'm already on to the trade of Tuesday because I'm so late today. The reason I'm late, we finally made our breakthrough and our website's complete. We're now, at least I'm starting to record video special reports for our clientele, our subscribers, and for you to look at as well. Now, how you do that is you're going to go to our website at www.iraepstein.com under the keyword. And what is that word? It's going to be research. Then you'll see our different reports. They're only up for 5 days at a time, so they do disappear. To make a long story short, in the metal markets, metals, I'm pointing to the others. In the metals, we got up to key areas today and failed against them. I show you that in my metals report today at the end of the day video. In stock indices, we're just staying strong as can be. This market realizes that the Fed has a decision to make in 9 days when their FOMC meeting takes place. So we'll find out what they're going to do. Brexit today took another turn. We'll find out if there's going to be a vote this week on Brexit. The late word, I cannot tell you what goes on because it's such a moving target there, that Mr. Johnson, the Prime Minister, might have the votes if he can get the vote called at the House of Commons without all kinds of crazy amendments attached to it. He might be able to pass a Brexit bill. Obviously, those that don't want to leave on the Brexit are going to fight him tooth and nail, just the way you see our president constantly embattled. When we look at a weekly area chart of closes on the S&P, as long as you're over this red line, which is the 18-week moving average of closes, the bias is up. Close under it, the bias is down. Support's back at that number at 29.64 1/4. When we come to the daily chart, I know I'm a broken record, but you're in a key resistance area. You keep coming up here, you come in the past resistance here, and you haven't been able to gain any traction past it. That's not to say it's not going to happen. There's more positive things than negative things right now looking like they might happen. Phase 1 of the U.S.-Chinese trade deal, a positive. We're in earnings season, hasn't been taking down the market for U.S. stocks. And of course, we've got Brexit staring us in the face. Which way's that going to go? When I look at the chart action, if we take a look at the high back here, and we come to that number's 30.08. We then break down, and this was Friday, and today's action carried you to 30.0750. Haven't taken that out yet. Even if you do, it doesn't mean much. You've got a pattern of a lower low and a higher high. You're not in a trend. What you are, though, is you're staying over the 18-day average, which is over the 100, and the 100's over the 200. That is a bull market setup. It's not a bearish setup. The problem for the market is the rallies get stymied, and as they do, what we're getting out of this sideways action is temporarily, at least because of today's rally, you're moving up the resistance target to 30.33. So if the market can clear that 30.08 level, and if it can grab traction, that could be a target. So where's the momentum of the market? That's measured by the slow stochastic. And we cannot count the current action because we don't know where the market's going to finish today. But we can go to the close of business yesterday, Monday. I realize today's Monday, but we're on Tuesday's action. Both numbers were over 80. Both were over 80 on Friday. They were not there on Thursday. Today's action's very important. It's Tuesday. I have to remind you, Tuesday reversals, a strong Monday often leads to the possibility of a Tuesday break in the market. So I'll be looking to see if that happens and if the market can hold on to the embedded reading. If it does, this takes leadership on the charts, and then I think the pros will become buyers on the market until the red line closes under 80. In the NASDAQ, we have the same type of setup occurring. And you can see you've got the higher high, lower low. We can see where the resistance is. What about the embedded reading? We cannot count today. So we go to Monday. Both numbers were over 80. Both were over 80 on Friday. And unlike the S&P, Both were over 80 on Thursday, not Wednesday. So you have an embedded reading, which tells me on pullbacks until that red line closes under 80, the pros are going to come out and buy this market on the pullbacks now. I will be looking for that with the goal, maybe the 80.45 level, the upper Bollinger Band, which again, we're in a resistance area. Most of these stock indices are. The Dow is different. It's just plain overbought. The market's got a higher high. Actually, it has higher highs, higher lows. It's got one of these patterns where it's working its way down towards the 18 and the 100-day average of closes. But it's overbought, not embedded, not trying to embed at this point. Then we get up to the Russell, and I think today was an important day. You know, I've been saying, and I've been talking about it, had to get through the 18, then the 100-day, then the 200-day moving average, and if it can get through all that, its nemesis is going to be the upper Bollinger Band, which you hit today and you backed away from. Backing away doesn't break the trend, but you are overbought, you have hit your upside target, you have higher lows, higher highs, and I'm cautious about a good up day on a Monday followed by a Tuesday where you can get something of a sizable correction. I'm nervous there. In the VIX, you have not embedded, you're working on it. As you can see, both numbers are under 20. Both were under 20. Were they under? Yeah, they were under it the day before, so they are embedded at the close today. So on this, as long as they stay embedded, I'm looking for the pros to sell this market as a futures contracts, you know, up in this area, until you lose that red number. And the target could be the 1211 zone. The funny part is if you hit 1211, or wherever that lower Bollinger Band comes in, I'm expecting the pros to also step in and write some puts against it, trying to get back to the closest of the 100 or the 18-day average of closes. In T-bonds, you are oversold, or are you trying to embed? Let's take a look. You can't count today. By the way, I might have screwed up on that other chart. You can't count, as I said, Tuesday. We got to go to Monday, both numbers under 20. Not under 20 on Friday, not embedded. It's that simple. I want to go back here, and on the VIX, this I can count because it's got the close 3 days in a row, so I was right on that one. In the 10-year note, you still have lower highs, lower lows, oversold. I see two areas of strong support between 129.13, the 100-day average, and the lower Bollinger Band. I don't know when the pros are going to step in and say they don't want to go through the FOMC meeting. It's probably not yet. This is only the 22nd for Tuesday's trade, so I don't know that they're doing that yet. I think they're going to pay more attention to these numbers and not do the short covering because of the FOMC meeting. In TLT, the trend is down. The market hit the lower Bollinger Band, bounced, still running it. I look for strong support, 137.94 to 90 in terms of pros stepping out of these markets at that price combination, and that might get them to go to the sideline on the FOMC. In the dollar index, the trend is still lower highs, lower lows. You've been under this Bollinger Band enough where you could get a bounce here. You're not embedded, you're just oversold. In the eurocurrency, the battleground has been to stay over the upper Bollinger Band. If you take a look here, we cannot count tonight's number because we don't know where that's going to finish up. But both numbers were over 80 on Monday's close, both over 80 on Friday's close, but not Thursday. That's the point I'm bringing up. We'll see if this market corrects enough to either embed or not embed. It's going to be an important day for it tomorrow. In the British pound, I don't know what to tell you other than you've had a monstrous vertical rally. The market is still counting on something happening. We had a crossover back here where the 18-day average got over the 100 and the market did its thing. It made new highs for the move. It doesn't have to do it by much, but it did it. And now the question is, on pullbacks, this is a support zone. Get a Brexit deal, and the question is, how high will the market go, not how low, in my opinion. In the Japanese yen, You've got a pattern of a lower low, a higher high, not a trend, but you have an embedded reading. That rules the day. That tells me on rallies this market will continue to get sales by the pros until that red line closes back over 20. And if that happens, then I'd look for the 18-day average. Until that occurs, you're still targeting wherever that lower Bollinger Band comes in. In Bitcoin, you've rallied back to the 18-day average of closes. You have a very narrow Bollinger Band. Now think of this. It's a pipe, and you're winding a spring in it. You've really been going pretty much sideways a long time. This market is now stuck at this 82.38 level. It's trying to figure out what does it do from there. It failed when it got to the lower Bollinger Band, couldn't mount anything. It's come back up here, resistance back at 85.99, and it's pretty neutral on the chart. Brent versus WTI crude, still slipping where the differential's narrowing between the two. The market has a pattern of higher lows, lower highs. It's a difficult market right here and stuck against the 18-day average of closes. Now, world trade is such that it's slowed down. Where's the demand going to come to kick this up? One of the issues could be Libya. Libya today came out and said that if they don't get funding from the government, they could lose 500,000 barrels to 1 million barrels a day of production. They're due $1 billion in their budget from the government. They haven't gotten it. I'm not saying they won't get it, but it's one of those things you have to keep your eye on. When we come to WTI crude, you've got a pattern of higher lows, higher high. You're hanging at the 18-day average of closes. Momentum is still basically positive, so the trend in this market is all to the upside unless you come back and take out that low over there. In the gasoline market, we have lower highs, lower lows, and I'll show you this as of last week. If you drop, I would be saying the 18 and the 100-day average could be your support area. That's just what you did, and now you're bouncing back from that. But in the process, you've gotten the market neutralized. You've got the lower highs, lower lows. Momentum is measured by the slow stochastic, is trying to point down while bias is up. The chart's a mess. In natural gas, anything at this lower number I'd be a little bit cautious of. Now, I just read that one of the big pipelines in the Permian that's supposed to come online for natural gas, 2 billion cubic feet a day or something, is not going to make it in the time frame that people thought. It had no impact on the market. That would be additional supply. It's not there. You're still in the bear pattern here. I think the pros will be looking at that 248.70 as resistance. You'd neutralize the market if you got back over this high of 255.10, and you got so close to that lower number, I don't know that you have to hit it. You've been knocking on the door of it, so we'll see what goes on there. As I told you, I've done my video report on silver. So now that we've gotten our website all done, I'm able to do these charts. Now, I did a quarterly chart for you. I did a monthly chart. I did the seasonal charts, a weekly chart, a series of daily charts, and I offer you what I think the market's at right now in the analysis. So if you'd like to look at it, be our guest. Go to www.iraepstein.com. When there, look at the word research. As it pulls down, you'll see Ira's Silver Report. Click on it. Enjoy it. I'm Ira Epstein. You have a good day, and I'll talk to you tomorrow.